So I just had a trade at 203 right here. That was adjusted to BitGet's price, so that's fine. That's fine. It missed by quite a bit. It wouldn't have hit on Binance. I wouldn't have gone 203 on Binance either. Actually, I would have, and it would have hit. So that's fine. That's not really important here. Not really important part of this. How low did it go on BitGet? 209. Not that bad. So the problem though is like this happens a lot where people are trying to take trades, and even if I was in this on Binance, it doesn't look that good, to be honest. This thing looks like it's about to get spiked down pretty hard. So what do you do in this moment? Because this happens to a lot of people. When you're trading, you have your trade here or whatever, and what do you do, right? Like you have to be able to make these adjustments. So I am going to use this guy as my order. Pink one here. That's where my order was placed. If I was in this trade right now, I wouldn't exactly be liking it either. It's not really holding anything. Looks like the 5-minute can maybe create something, but this wouldn't exactly be like a great moment. So if I was in this trade and taking this trade, we can kind of walk back to the decision. And first off, where this trade starts and why. Just by the basis origin of this trade, it is risky. It is risky. There's kind of two outcomes to this trade, right? If you hit your hourly level here, right? Hit your hourly level, get rid of that, get rid of a lot of this old stuff that we don't need. Hit your hourly level pretty perfectly there. That's fine. And start to move up off of that. No real development of the move. So one of the things we have to be aware of here is that this could possibly still be trying to find its bottom. Like when it was here, it was still trying to find its bottom, the bottom of its move, right? Like it hadn't gone and back attacked anything important. There has to be, first off, there has to be some type of event here that stops this from moving down and is able to break some type of ladder point or some type of hierarchy that's created, some type of trend, some type of origin. There has to be something it creates in order to start moving up again. So the question right now, the first question about this move is, can it move up yet, right? And you can even have something like this. I don't even know if this is a trend, but we can try. No, it's not even a trend. You have to have some type of criteria telling you that you're breaking above this, right? At this point, you're creating so many larger hold levels and time frames here that the longer you're staying here, the more of these kind of like backsides and front sides you're creating, which I think is kind of obvious, right? Like the more like backside frontside combo levels you're creating and stuff like that, right? See, like this thing's just bleeding through now. This is exactly why I didn't want to take this trade. So we'll talk about that. But the first part of understanding this is knowing that this potentially hasn't found its move yet, and really you would be looking at something like this to see if it's done moving. It's just a 1 hour. You'd be looking at something like this to see if it's done moving. To simply say, like, you have some type of, you know, zoom out and you have some type of accumulation that you can form off of an origin level. Hold an origin level long enough to break this, and then you move up into these upper ranges. I don't know if 22.7 can hold anymore due to the amount of accumulation that has happened here, unless there's a setup for it in the future. Like, unless you have, oh, well, I guess we should be trading right now. Jesus, dude. Yeah, that's exactly why you don't take that trade. Well, I guess we should have been trading. That's okay. Let's continue. Because that's your target right here. That's your target right here. And now that it's gone this close here, we can talk about these adjustments on the fly. You have to be able to create. This is like actually kind of perfect. You know, now in here, you need to find some deeper target for the rebuy down in here. You need to find some deeper target that can show you the rebuy origin 15 right here. That has the hourly there. Yep, that's the origin 15 right there. So you find some deeper target to create this type of not only a trend, but also something that can hold this accumulation into the breakout, right? Like you can hold this into breaking up into this move. And yeah, that's really what you're looking for, right? Like that's the first part of understanding this move. And you have to make those adjustments accordingly, because there was no real bottom of the move. So whenever you see like 5-minute levels like that and they don't get hit, and you have to be able to recognize that too and say, like, that's why I said I would just be getting out of this trade, because it's kind of a donkey trade. Like it doesn't make sense to be in it. Like it doesn't make sense to be sitting here in this 5 and it doesn't instantly bounce and develop, because this thing still hasn't found its bottom, right? Like it still hasn't found where it can create that accumulation. So you need to have that point of where can it create accumulation, right? You don't have it anywhere else here. You kind of have it here, but this is like failing, and that 5-minute is just like pre-breakout to move down. So there's like really no point to take this level either. Just because it's on the chart doesn't mean it makes sense, right? That's a big important one to understand. Hello. So that's kind of like step 1 in this trade. Find where at least the bottom can be to start creating accumulation. Like that's step 1. So when this trade is happening, I kind of already know this going into the trade. I already know that like that was a super risky trade. Like this to me is like hyper risky. And if it doesn't hit exactly on this and move up fast, I'm out of that trade, because it just looks like it's about to dump, which it does. And who cares what part of the move it hits? Fine, it hits the wick, it's tested. It doesn't matter. Like this is tested. And unless this thing is like gonna hit this and rip right up, and part of the problem here is that it actually doesn't hit the level and it gets front run. So there's not gonna be enough. Like this needs. Whenever you have a level like this and you're kind of by polarity, you've got this hourly here, this hourly origin gonna break the move down, right? Like long term. Whenever you're at this moment, right? Like whenever you're at this moment, kind of one of two things is gonna happen. You're typically either gonna hit the level and bounce right off, or you're just gonna stop here and you're gonna hit it and you're gonna rip up, because this is like final polarity. If you don't get that instant reaction when you're right beside that origin level, it's like every single origin level. Like, I don't know, pick a 1-minute level. Where's like a 1-minute origin? Right here, right? Here's a 1-minute origin. If you don't get that kind of instant bounce off of it, like it has to sit there and just like continuously hold the move. You have to either get that instant bounce or like the move is breaking the other way, right? Like you see it here, the move is breaking the other way if it doesn't get that like instant bounce, right? Or I'll pick an origin. Here's one right here. This is what you're looking for. You're looking for that touch and that instant bounce off. You know, when you just kind of linger around these origin levels, like they're breaking, right? And that's how these breakouts happen. You can go find any spot where there's like an origin level. Here's one. When you linger around it too much like this, it's just not having that rejection it needs, and it just becomes too risky to take the rebuy. Like if you took the short right here, the fact that you like move down and you're just like kind of lingering around here, you got to be out of that, right? Like that's just kind of common sense there. The same thing happens here with this level. Like it's about polarity, not the origin. It's about a polarized moment and its ability to kind of, you know, rip a move into the other direction. We wouldn't have caught this either, because I would have went for 15 here. Another 30% under. That's a good risk to take. Yeah. You might even be able to find something else in here. Might even be able to go a little greedier here on this trade. 15 right here. First question you ask yourself, does that still ladder the move? Yep. See front run the 15, the 5. Because that still ladders the move. And then at least this can create polarity, right? At least you can kind of go like right here. Use this hourly as the origin, or even this 15-minute as the origin for the future. Like you can pick which one makes sense based on how deep this move goes. So you've got hourly, 15-minute, 5, right? But that's how you have to look at this trade. You've got hourly, 15, 5. And really you're just RAing these 3. And if you miss the trade, you miss the trade. It's not a big deal. It's not a big deal to miss this kind of knife catch. You're going to be better off taking the rebuys anyways, but at least you can see which one is hit. And so like the strategy here becomes You take this level, this 5 minute, and you slightly front run it because you know it doesn't quite have to hit that level, but because it can still test the 15, it can still test the hourly, so it can go like this and up, it can go like this and up, or it could go like down to like this part and up, or it could just literally respect. Like there's like I see this as like having about 6 different outcomes. So outcome number 1 is, well, 7 actually, because this is one of them. Ladder the move, that's 1. Test that, that's 2. Wait, front run that level, that's 2, which is still the same. So this is all in one move, so you won't even use that at this point. So this is 1, that event has happened. 2, 3, 4, 5, 6, 7. Like 7 different possibilities with a huge range in between them. So you just take this or this. You just take 6 or 7, and that's it. It's as simple as that. If you're taking any trade here, that's it. You're either set at this hourly before this dump happens, right? Or you're doing that. So we're gonna watch this move play out right now. So my first trade, we're gonna do our trade as green for the monies. First trade would have been like right here, 885. That didn't hit, so now I have to adjust. So now I have to go into this thing and say, okay, what's happening? If I'm, here, let's move the green up. If I'm getting rebuy on this thing, I've got to start looking interior to the spots of where rebuy can happen. Oopsies. Interior rebuy spots. Hold level. %, that's a pretty big move. It's already tested. I'd not use it anymore. A body creation backside. Yeah, I wouldn't be taking any of these. Hourly reverse, no. 15 inside. So that would be the first spot I might consider a rebuy. 15 interior. Combos to the 5 back or 5 front. Oh, that would have actually been a pretty decent spot. Backside, front side. So you just take the backside because it's so close, right? That actually would have been a pretty decent spot to take this trade. So now you got it. So this might actually try to gain the next 5. So there's a possibility here that this gains this. Damn. Well, doesn't matter. You still can't take the trade. Doesn't matter. You still can't take the trade. I don't think this thing could possibly be done moving down. Backside 5, front side 5. 5 tested, 5 wick tested. So it's just testing wicks, just like it did on the top part of the chart. 5 there, test there, hourly. So this would have been the first buy spot, which is pretty bang on. Damn, that's too bad. At this point, you need to break over the 5 and rebuy the 1. I don't even think this is done dumping. I don't even know if I would take a buy on this yet. So let's go back to this for a minute, this 5 minute, because this is a spot I see a lot of people getting caught out on. Moves dumping. Walk through this minute by minute. I'm looking at this and I'm measuring and I'm saying, okay, if this thing has a flash dump, it can go down 40%. Like if it was like 17%, I'd be like, yeah, there's no way I'm taking it. 40%, it's enough. It's enough. I'm looking at the architecture of the move. Back test the hourly. Doesn't really gain anything, right? Doesn't really have any like ladder points it broke, so there's nothing to really fall in love with this trade. There's no ladder points, there's no, you know, anything of importance. It just simply hits a like just your inverse level, right? Like there's no real importance here to this. So I'm looking at this and I'm saying, okay, if this is going to break the move, it kind of has to test the 5 minute and that's it. So I'm willing to take a 5 minute attempt here. I'm willing to try to take this 5 minute. But it's moving down, okay, whatever. Moving down. At this point, I'm starting to look at other time frames, and I'm starting to say, oh shoot, it hit the 15. So that's gonna like be not much left in this move. It's gonna have to have a wicked bounce, especially if it's testing higher time frame levels already. So at this point, I'm thinking, okay, I can buy here. If it comes too close, I can go here. right? And that's what I did. I went deeper in the move under the trend to the spot that could hold it, right? So like if you look at my order book, I went from 21,105 to 21,143. So I went from this. So right now I'm just thinking this. I'm just thinking, okay, 5-minute level. Let's go for the 5-minute level. Front runs it. There's literally no point to sit in this trade still. The level is tested. There is 0 point, especially so close to Polarity. The only thing I'm thinking that can happen now is you can deep dive trend based off of this guy here. So you could go down, test up, but that's got to happen pretty fast, because if this starts holding its move, this is the level tested and it's attempting to hold its move, right there. It's attempting to hold its move and break above. So at this point now, it's just like, okay, well, this is becoming a little too scary. I would just be, and that's exactly where I removed my order. And I just said, no, like, this is not, that's right. Like, I'm pretty sure if we rewound the replay, I said like right here that this is just like not, I would not be in this trade. I would just be getting out at this point, because now there's 24%. If it didn't have this bounce, I would have been just kind of looking for it to kind of hover here and then just like bleed through here to regain this as the reverse 5, if it could. But when it starts this kind of, we've tested, we're attempting to break out and we're still falling, it just looks like it's about to break Polarity. It just looks like it's about to break Polarity. You have to make that adjustment. So there's one moment here where I'm sitting here waiting to get filled. I don't get filled, and it's like, God damn it, it bounced. Okay, let's move it down to 140, whatever that 15-minute level was there. You can't really make a case for this because it has to ladder that, and this is kind of getting below trend. So the only thing you're trying to do here is, like this range trend, right? So you're just trying to go below range trend, because this was the floating level. It did get tested, so you can go below range trend, ladder long term, hold this as a confirmed trend. But that's like really the only thing you're trying to do, right? Like you're just trying to say, okay, there's trend, so you could go like, you know, something like this, create the origin here, go a little deeper, something like this. Like that's like where I believe I got that 141 from, is like deeper than the trend, but above what could be the 15-minute origin, because you need to kind of set that architecture up, right? So what I need now, this bounces 5 minutes tested. I need this thing to sink down and then just fall to here to spike up, because that's going to create kind of some architecture right here that I need to use. Like if I was to go to a 3 minute, that could be like right here. If I was to go to a 5 minute, it could also be there as well. You know, as soon as you attempt to gain that 5 minute, those are blown out of the water. Those expectations, you need to use that to gain it, not to test it and reject it like that. That's kind of like gone at that point. So here's where I'm looking to enter now. At that point, it's like, no, you need to get out of this trade, like I said, and just take that off the book, because at that point, there's no, like, you've already tried to gain the level. You've already failed gaining that 5 minute level. Yeah, can you gain an hourly off that? Not likely. You're just going to dump and just test the inverse here in the future, create origin, blah, blah, blah. Same old song and dance. But at this point, it's not feasible to take any trades here. It's too polarized. It's too polarized, and there's a lot of entry. Like there's a lot of spots between here and here. That's like a 2% range, 1.5. That's a huge range that you can go after, right? So that's where you have to make that adjustment. That's where you have to make that adjustment from, you know, here to down here somewhere to go through trend to hold it. And then once it's already made its attempt to gain its level like this, you're just out of the trade. Like that's it. And that's where you get that. Like there's nothing left to buy here. That doesn't make sense anymore to buy here. I don't even think it makes sense to buy this anymore either. Now you need to start adjusting your expectations down. Now you need to start looking at what could possibly create the long-term architecture. Now you're here saying, to the deepest levels only 47%. That's not a lot. Like that's pretty thin for a move to just stop dumping all of a sudden after snapping polarity that much, like equivalently, that would be like breaking above here to stop like here. That would be the equivalent, right? Like okay man, like that would be the equivalent, like, oh, let's break this ladder point to get this one and then reject, right? Like that would be maybe not the exact equivalent, but when you see how fast, you know, Bitcoin moves, you have to find the right spot. But again, this is going to be somewhat of the bottom of the range, so you could start looking at bigger time frames now too, because I don't even like these as the 10s. So what I want to do now, so I want to look at the bigger time frames. Oh. 4 hour here, backside here, hits backside, breaks front side, backside ladders to move down. So there's no real like origin that you buy that broke this thing out, because this was just a question about laddering. So now if this thing is going to continue to move up, it's off of like one of these levels, right? Likely the backside 4 hour. At that point, you've got this. This is just an in-between spot that could hold it up. If that is going to hold it up, what are the spots it can deep dive? Well, this becomes one of them. Backside 4 hour, which is likely the daily as well. Yeah, that's the daily. So that becomes one of them. This doesn't become one for sure. That's way too deep in the move. So this becomes one spot that you can start to think about a 10 off of. If it's going to test this, does it have a combo to anything deeper in the move? Right here. Ladders above the origin, it's perfect. Ladders above the origin, that becomes your 10. So if I was developing this range, I'd look to do it off of this, which now develops this, which now develops this. So I would use this as a 10. Can this hold it? Yep. Can this be trend? Yep. I is way too late though. So you have two choices. This as your 10. I'm just putting this as a dashed line. Or this is your 10. So you have two choices right now of how you want to take this trade. Does it dump another 40% and move up? Does it dump another 90% and move up? I'm gonna base it on how this develops right here. I'm gonna base it on how this develops. And what I would be looking for is if you start to move down fast right now, it's likely gonna be this. If you start moving down and holding levels like this and start creating like inverses here, then it's gonna be more like this, or it can go like this to see if it can like create an origin somewhere, like maybe right here versus backside inverse, and which one gets tested. Does it go here, which it will, and then it goes here like this and develops something here, pulls back to one of these reverse levels, and then hits this origin again to see if it can break it up. Like, that would be how that plays out, right? So I'm gonna base which one it is on this. Right now, I would be more inclined to just sit here. So the next part of this move is going to be well, I'm gonna leave my expectation. I think it's gonna just keep dumping. But the next part of this move will be obviously trying to find that bottom And this ultimately becomes the bottom of the move right here, this 4 hour here. You know, if this thing is going to keep moving up, it's got to develop some kind of base right here. Like if it's going to break this upper range, it's got to develop some base right here. This is your floating level right here. It's one floating level. It's an untested float. And so is this. So you've got 2 spots. This 4 hour holds it up. You attempt to create accumulation to break the top of the move. The hourly origin holds it up. You look for more of a breakdown of that move. Now, see, this is could have been a buy spot right here, body of this, but it just looks like it's moving down still. This is not deep enough in its move. At this point, where's my green line? At this point, I'm down here. If this hits and holds, this can break the move up long term. If it's this guy that holds, that's more like trying to break down to that float level. Because if you create this as a hold, it's going to create some big massive daily backside. Some big major target to like just crush the move. This just creates a ladder. So that's a really important distinction to understand when you're talking about these trades and looking at these moves. Like which level holds it will communicate what happens next. Like I said, if this holds, it's not good. It's not good. Because then it's just holding some crazy backside. It's just creating some crazy backside. If that holds, eventually this one right here, the body right here. So for example, it tests and then it does a bunch of stuff and creates like a candle here on the 4 and this and that and this and that. And then that's going to be like the breakdown to that float where you can come back to here to see if it can break up. If you go down to here, it's just laddering a move off the breakout. So 2 very different expectations. Let's see how this plays out. Where would everybody be taking a trade here? Not between my 2 levels, but a different target, perhaps even. I would be looking at this 722. There's no way I would touch anything in here, like I said before. Yeah, it could ladder some kind of in-between point. I'm not concerned about that though. I'd rather get a rebuy at that point. I'd rather get a rebuy, even if it's 80% higher. Who cares? It's safer. On spot, sure, do whatever you want on spot. But on futures, oh my god. Yeah, good luck with that. Yeah, no. Nope. No thanks. Not even any separation on the 15. So it's going to go above this, hit that, ladder the move, create it as a reverse, and it's going to go hit, 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 dump. No thanks. I would not buy this rebuy. This right here, no way. The only thing, if I was playing this range, that I might consider is this. Maybe. And that's like a hard maybe. 8:30. That 5-minute origin. Yep. But would you take that trade right now, Nuke? 40% lower than the current part of the move. And if you would, let's see if you're right. It's going to happen pretty quickly here. Nuke's going here. Yes, Minnow, this is where everybody chats for the live mentorship. You're welcome. Uninfluenced by mentorship stream, I think I probably would. I think given what you have talked about, maybe I would just be looking for re-entry in general rather than knife catch. In this move, I would be looking for a re-entry. It hasn't settled its move. That's the problem. When you're trying to find the top or the bottom of a move, you don't know which range it's going to hold. So you're always going to be, your best bet's always going to be to identify like the deepest part of what could hold it up and the reasons why. This broke the move out, so it has to hold above it. This was like what broke that move out, which was this origin, and that's the level right above the origin. So it's laddering the retest of the origin breakout. So you could even go all the way down to 694 here, 650. This broke the move out. This can hold over top of the break. So you either go back test the spot that held the move or the ladder point right above it. The ladder point is so untested and so unaffected, it kind of makes more sense. 710 is a long. Maybe I would buy this, but I don't even think so. I don't think so. If you're trading spot, sure. 100x? There's no goddamn way, dude. I would rather get the rebuy once you break above this and confirm bigger time frames. Like, see, there it is right there. I just don't think it's enough. I just don't think it's enough. I don't think it's hit target. You're taking the first trend on what could be 7 and 9, 8, 7. So you're taking the first trend on the 7. So that's crazy. That's crazy to me. Think of that. Imagine that. 10, 9, 8, 7. The first 1 minute trend off of the 7 out of 10. Yeah, if it holds, it's great. Great move. He starts snapping up pretty good. But like the first 1 minute trend off a 7 out of 10, you have to look at it that way because that's really crazy to me. Maybe if you're spot, but yeah, I don't know about that. Hallelujah if it breaks up, but as a stabilizer to the move, no, I wouldn't be taking this. We're gonna hit this and pull back. Gain the 1 minute, combo the inverse. If you even hit it. You could go a little higher, but there it is. And that breaks the move down probably. Combo rejection, inverse plus hold level. No thanks. Maybe as a scalp? Was this 20%? No. You could have taken 14% on this. Yeah, if that was your trade. If it was like a 2-minute trade, I think that's smart. Let's see what happens. $8.30 to $8.22. I like 7.10. Clean 5-minute rate above the origin breakout that broke up the whole entire move. If it's going to move up, it's going to be the 10 out of 10 where it does it off of. And it gives you a little room to stop out at the origin point too. The breakout, the exact touch of it. Not like a double-ended polarity here. Gives you room to 24. Gives you room to put like a 35% stop loss. A big stop loss, but it gives you that room. You could just take the lower level if you have weak stomach on that stop loss. So this is Nukes. We're going to put his as the thicker line. And this is mine, the thinner one. The 1 hour, Minnow says. Too obvious. It could for sure go after it, but that's a different architecture that's being described. That's a different set of architecture. Like if you were in this trade right now, for example, if you bought this, you would have been limit exiting right here, by the way, because like if it can't just break the move up here, like I would have just limit exited right here. If I bought that, I would have taken my 14% on this next push up here. I mean, it's a little haphazard, but because you can go for higher in the move, you can go for like this and then limit out right there. But I personally would have limited out just right here. I wouldn't have taken the risk to try to get to that second level. Like, so then you set your stop right there. So this was already hit. So next is going to be testing this. So I would have set my limit stop to there. So if I did take this trend, it's 15% or 25%. And for reasons like this is why I would have taken it here. Now you can sit here and hold it, but this could also just dump the move instantly. You like 805 now? Okay, so let's go to 805 for you. $7.49. Yeah, I mean, this all is inside of that. So if you go to the daily at 7.49, then, you know, you're just, now you're 20% away from the first target, 43% away from the second target, close to liquidation on what could be like a deep stop loss. So we can put Matt at 7.49. It's possible. It's possible for sure. But I like going a little bit deeper in the daily. 805 with a 15% stop. Okay. So again, part of this is understanding what those do to the move. So Nuke, your 805 creates an origin. Okay. So an origin is going to hit, pull back somewhere, and try to reattack the move. So your trade, 90% profits, maybe at 130% profits. So that's your trade, Nuke, because if this hits here, yes, it could rip up in like it could rip way up here and then go back down for sure. But this is creating an origin for a breakout. So, you know, if you take a scalp here, if you enter a trade, you're likely going to go up, test the ladder point here, and then go up again. So you're taking a possible 10 for 60% maybe, because then you have to take profits there and get the rebuy, unless it just goes straight up, and then that's a different story. It could go straight up, sure. So you're taking a 10 for a 1% move. So you're pretty 1-to-1 risk to reward. Matt's trade, where it hits the daily, minimum goes to the backside that broke this out. So Matt's trade is a 2% minimum. What happens if you target this? It pulls back, you get a re-entry at around here. So it's possibly a 2% or a 1.2 with a stop underneath. So stop right here. So like 0.95, which is a market stop. So you say like 0.85, worst case scenario. Let's just say 0.9. 0.9 worst case scenario, right? Yeah, 0.9 worst case scenario. One of the better, not the best case. You could always go up to here, which is the latter point of the move. Or the higher origin. Yeah, that would be like this. So 3%. So Matt's trade is anywhere from 2 to 3% with a minimum lockup of 0.9. If you hold the point of the move that broke you out, you're going to ladder the architecture against that. So then your trade looks like this. This broke it out to here, right? Which ultimately pushes you up to there, which is laddered here to here to here. So this trade is more of like your 5-6% trade because it's going to try to ladder off of this, or it's going to go for trend. So this is 4.5 to trend, 4% to this inverse here, right here, 4% to this inverse, 4.5 to trend. Possible ladder the move to 6. So if you're going to risk $1,000 on any one of these levels, or 2,000 or 500, the implied odds is important to know, because this breakout, if you hold above this or the part that broke out the move, it's just telling you you're still going in the other direction. So if you hold this or this, one of these two levels, it still tells you that it's at least going to, you know, go attack this trend here, which is the ladder point to this. This broke the move to here. Hit the ladder that holds the move. Trend is your first target. Second target is going to here, pulling back, right? Third target is just blowing over the top of this whole entire thing. So this is really important to understand, that the architecture will give you your trade. Like your trade here is like maybe 1%, maybe 1.5. Matt's is 2, maybe 3, best case scenario. This best case scenario is like up into this range here. So this best case scenario just creates the next like, oh dude, man. This best case scenario here creates like up into here. So like 16-17%. So the difference being $1,000 in profit, $2,500 in profit, 16,000 in profit. If you were just to use, you know, so like understanding what these targets represent and where it can go is important, because your trade nuke, you can't really ride this to trend. I mean, you can, it can go to the same trend I'm talking about with mine. Of course it can, but you know, the likeliness is, well, I don't know, maybe like 5%, 10%. Imagine hitting just like a ladder point float, or not even a float, just like a ladder point trend with targets right underneath you. Like the origin breaks out the move, you know how it is. Origin breaks out the move and it goes and back tests it to see if it can move in that same direction, right? So you're risking for a 1% trade here. Like you're almost better taking this short down to that level. It's safer, and I bet you it's that same 1%. Yep. You're better off trying to take this to that. Here, this is a safer trade, as disgusting as that is. A short off of a recent dump that's about to move up. You're better off taking that, like reverse trade, and then just stopping out if you gain a 1-minute level somewhere. Like it's the same trade, it's just the smarter side of it. It's literally the same trade. Because in order for this short to be in negative profits, you simply just hold a level here. And then you can get out and lock up 25%. And that's fine too. I did that yesterday on that 5-minute level in the call, remember? And I could have held it for 2% and I just locked up 30 because I was just like, nope, just the risk profile isn't worth it. You're just better off taking 20% if you gain that level. 25%, 20%, anything in here, it doesn't matter. That's like my trade yesterday. Oh, it's not on the books anymore. Well, I made like 500 off of a trade where it just was like the same type of setup. Just engineered to go to a different spot anyway. You could have just taken this trade right here. Although I don't know if that's worth it. I would still be in this short. 22%? Yeah, no. I would still be in this short. Seeing if we can break this move down to here. Or even maybe like here for the 9.9. It's almost as much as that trade there. It's almost as much as this. This is a little more, but the risk is huge. Yeah, you could just get out of this trade if this closes above the level now. If it closes above the level, you don't have to panic out. There's no panic on this trade. There's nothing to exit. So yeah, a big part of this is understanding like what your target represents in nuke. So if you're buying this, what does it represent? An origin level, which means if it represents an origin level here, well, the 15 here, you've got the 5 in pink, you've got all these origin levels. If touching this represents a further breakdown, why long? Because you're just going to go like this to see if you can hold it. So your trade can only exist from here to here, and then you can only get re-entry on a reverse to reduce that risk again. But you can't hold this to here and then hold it to this level just to see if it's going up. You just rebuy this level. So this is all your trade exists for. Because an origin is telling you, hey, I'm going to break down. And origins, they love to test multiple times. They love to go like this, and then like this, and then like this, and then like this, and then hold and move up. And if it holds long enough, yeah, then it creates a 4-hour candle right there, and it's good. But your trade you can't ride this wave. It's too risky, and it's pointless when you could just be taking the scalps in between. You could just like, there's nothing. You like on 100x trading, you know how much money you make on scalp. So that's the problem with this grouping of longs, because it doesn't really represent like a huge profit spot. It just kind of represents like if it holds, yeah, it was the best spot. But how many times are you in a trade where it's like, oh, if it holds, it's good? Well, of course, if it holds, it's good. Everything's good if it holds. But just, yeah, look, it's dumping now. See? Rate to target. Rate to frickin' target. Like I said, it's I called it, man. It's either this or this and nothing in between. Rate to target, dude. Like I said, you have a 10 here and you have a 10 here, and they're two different things. This is this creates an origin as a 10. This represents the longer term breakup of a 10. And then you regain all these, and there's your origins. I freaking called this thing down to the like, where's the goddamn crystal ball? I gotta patent that thing, because this is like so bingo straight on. It's disgusting. So crazy how accurate that call was. And then all of these, it instantly goes up and creates them all as origin reverses. I don't even know if you would have got target on this guy here. No, I think I marked this level earlier in the day. And I don't even know if I like that level, to be honest. No, it doesn't even get close. 894. Wait, what was the price on here? 894. Oh, is this $70 away? Jesus. So that's like, yeah, there's literally nothing else I can do here. That's it. 2-day and 30-minute doesn't work. Don't ever use them. Blue minnow. Only use the time frames you see me have. So that's the thing. Your 10 is here as origin because you have the ability to support all origins. And this is just a scalp trade. Like, I might even be out of this thing soon. Like, what's the percentage on this? Like I said, you're better off taking this trade to here for 90%. This, I might even already be out. 50%? Problem is, if you don't gain this, you sink pretty quick back to reverse here. You forfeit all profits. If this candle moves straight up, then I would stay. I would stay till maybe here. So there's two trades that can exist there. 70% this way. Yeah, see? Like, and if this doesn't hold, it just goes for the next target. There's 70% this way and 90% this way. And that's where those trades exist and nothing else. You can go to the 15. But at that point, you create trend. You've held the move. If you start getting up to here, you want to hold the trade. Yeah, absolutely, Nuke. 100%. The problem is, though, now that this is tested, this is becoming less likely. This thing has to fall fast. This can't, like, and that's why I would maybe think about a profit lockup here, because this thing has to fall really fast in order to get here. So you might even, if you were here, 1% maybe maxed out 1%. This thing has to fall quick in order to get there. If this just lingers, then I would just stay in the trade until the higher moments. But if this, like, I don't even think you can profit lock up here. You go right here. You take your 70% and then you rebuy this. If this goes there quickly, that's what you do. If this starts messing around up in here, back and forth a little bit, then you just remove this off the books, because then you're just like, oh, developing timeframes with origin support, like reverse criteria. Like, this has got to go fast, or it's an RIP. Damn, talk about like insane accuracy with this. That is so crazy. But that's exactly where it's going to go, and it has nowhere else it can go. Everything else is just too risky. Actually too risky. But I think you can see how and why I justified this as a trade, right? Like, you can, going from back here, why you have two 10s in the move. And they're not that it's one is a 9, one is a 10. One is a 10 to the origin, which has a completely different expectation long term. See, you can't gain this, and this is exactly it. You just start back testing origins and you forfeit all your profits. Like, this is a situation you don't want to be in. Stuck in this trade. That is a scalp to me, and that's it. If it moves up, great. But again, this is not the situation you want to be in when you're in a great trade here and you're just kind of moving down to seeing what you could target, and then it's like you're forfeiting profits by the minute. Remember, this is a 10 against the origin. And what does the origin represent? The origin represents breaking down below this level. You're not going to form an origin here and be like, oh, just kidding, drop 40% and mooned. Like, that's not the way it works. Origins crush moves. You're just going to go straight down to that float at that point. The 4 hour much down. I think it's like 20,200 or something like that. I don't even know where it is. But this is a 10. And if it stabilizes, this is gone. You don't even use this. If this doesn't stabilize, you use this. I think this thing goes lower. Like I said, from zero, if you're like silly to do any of that, you might as well just take this short here. That's it. That's the play, because there's no need to wait in this all day long. But you want this to hit, and then you want it to raise above this and get all that origin stuff in here. That's what you're looking for on this. You can't make mistakes when it comes to derivatives. If you guys and gals are trading 100x, you cannot make mistakes. You cannot make mistakes on this stuff. 2817? No. I don't know what you mean by do you look back? No. Nope, too risky. If it holds, it holds. Too risky, though. Excuse me, coughing like crazy. Yeah, situation you don't want to be in. Told you, just a scalp to here. That's it. No, I don't test this more than once. Well, it's like I said, it's an origin. Like you can go and test it multiple times, but is it worth the risk? Risk just because if whatever 817, what is that? Whatever that bounces the move, it doesn't mean it's worth the risk. Like anything can bounce a move, but risk profiling it is more important. Oh, this cough, Jesus. Risk profiling is the most important thing here. I woke up. I thought I shook this cough today. I was like, wow, I feel great. Start talking. Nope. Just kidding. And I'm perfectly fine in every other way. Like I'm exercising every day. I'm walking. I'm doing like all sorts of stuff. I'm very busy every day. But then comes to talking. Jesus. 817 is the backside bottom. No. Would you still be in the trade? I would have gotten out here. I would have gotten out here. I don't see a value where you can take 57%. I don't see a lot of value in holding for an extra 13%. Regardless if this thing moves up, I don't really care. Best case scenario, you go here to 82, 85. So you take all that extra risk for what, an extra 20%? You could have got out here 58%. So you're talking about 24% more. Possible 25% more. No. Yeah. 24. 5 times, yeah, 27. No, that's not worth it at all. Like I said, the smarter trade exists right here. Because if you're only hitting a 7 and you didn't gain like some crazy stuff up here, you're better off just like reversing the trade for 90%. You would have made more on this stupid little short than you would have taken all that risk on this long. So what would you do now if you're still on the trade? Get out because it's not holding any levels anymore? Now you're market exiting? Like where are you getting out? Still staying in the trade? Yeah, I mean, you're risking a dump. Well, now you're here for it. Okay, best case scenario, you're at 39%. Oh, didn't reach it. I'm sitting here holding my stop. God, I hope it moves up. Sitting here holding my stop. Come on, dude. Just fill the order, please. Oh, okay. I guess I have to move it up now because it created a hold level. It tested that already, so I'm up here or market exiting. So where do I market exit? So now I can either take profits here. If it holds here, could it move up? I guess I'm just going for this, right? So now I'm here. I'm going for this. Okay, let's see if it gains the move. If it can't gain this 1 minute, I got a market exit. Okay, so you're still sitting here waiting. You start thinking about, should we get out in here? Okay, well, it's got to hold this. If it can't hold this, then you've got to get out. So you're still in your trade nuke. You're like, okay, it's holding. So if it goes under this, where do you try to get out? Do you try to get out back right here? Hasn't gone under it yet. So you're, oh shit. Okay, so let's set our exit right here, 34%. Okay, it just got hit. Okay, good. Out of the trade, 34%. Got lucky. Unless you didn't take the exit because it hasn't hard closed yet. But I mean, it's getting pretty risky. Still in 1 minute trend is your trigger. Like this. I'm going to say you're probably doing this one. Okay, still in. Okay. So you trigger out here and you market exit. Do you have a market exit nuke? So you're forfeiting another 4% on top of the market price, which is going to be lower than the actual trigger, right? Is that the way it works? So now you'd be triggered out right here, 21% profits. If that's how you're playing it, 21% profits. That's a lot of risk to take for 20% lockup. That's a lot. I'll just take the 58% up here. We have to take 6% off market exit fees. You can't ever justify, here's 50%, take it. You can. Like, I did that once upon a time because it allowed me to just print an income. So it allowed me to just constantly print an income. So once upon a time, the target would have been just when you're not really boosting above this hold level. Like, you get this hold level and you're not really moving up and you're struggling. Like, you kind of laddered off this part of the move and you just kind of stopped dead there. I would have just been taking a limit exit right in here. Or when it stopped here and had the pullback, I would have just reset my limit exit like right here. Right here. If you gain that 1 minute level and you're not like moving up, also because I do think it's going to go down here. So that's another point of it. This would have been like 58%. I mean, I said that when the trade was happening in this 1 minute candle, I said I would just take exit here. So the point of that is sticky, you know, like if you gain this 1 minute level and you just like hard rejected this move below all of these origins, you pretty much have to gain this and move up. Like, you pretty much, this is going to be one of those moves that looks like this. Hit the level, create the hold above this blue level back here, and then just keep moving up fast. Like, you wouldn't, what you wouldn't do is you wouldn't go create the level and have a pullback right to the hold level. You wouldn't even give chance to get re-entry there. This wouldn't even be a re-entry chance. This would just fly. It would go like this, create the hold level, and then never just go back. It would just go straight up to some bigger target like this. And then have a little pullback to like something like here. And then it would just move up. And this 1 minute hold level in the future would have been like, yeah, that's the only way I wouldn't have taken that exit there. It's just the setup of how it looks like in the moment. But this is so obvious to see when you create this hold level above and then you pull back to it and you're kind of struggling, like you hit and pull back instantly to the hold level. You shouldn't be able to get re-entry like that. It's just going to hit this and just brick wall it like that and then just move down again. This thing has to basically generate like a 1 to 2% move, because look at all the hold levels. Like, look at all the origins. Like this has to like generate a massive move up. Like, this is 70% and it hasn't even created a hold level yet. And then this hold level just moves it up. Or like, and that's not even a polarized move. Where was the polarized move over here? Like stuff like this. Hit your level? Because this was, I believe this was the first test. Yeah. So that's like the same thing we're in now, like the first test of a range. Hit a level, pulls up 30%, never creates a hold level, creates your hold level here, and then never goes back to even touch it. Goes up probably like 1 or 2% before even coming back. That's where I'd look to stay in this thing long term. And then it comes back to here and hits that hold level. And then this just doesn't ladder the move. It's a second time. That's it. See, like you create this as a hold level. And it's not like you, or even this one here, right? Or even this here. You just don't linger around there. You're creating that range polarity like that. It's not going to just kind of fail. I don't know what the next target's going to be yet. You have to wait to see where it goes first. We're going to move Ziggy up in the queue. Wind Rider, he's doing well on his too. Dak is doing good on his. We're not doing this today. Because I don't think there's enough people here right now to do CB because it's Sunday morning, which is fair. But I think we're doing better doing this diagnosis on this move anyways. We'll move Ikata up. I still don't have dates. I have no clue. We'll move Nemesis up. So basically the way I do this sheet for anybody who's new is I look who's putting in the most usable data, and then we do those people first so that it gives other people time to kind of continue to fill in their sheets. Now, Blue, you don't have to worry about doing this yet because you're still studying, so don't worry about that. You can start this next month when you're caught up a little bit, and then we'll be doing a new round next month anyways. We'll do Ziggy first next week as long as he continues to have good metrics. Yeah, that's fair, Nuke. That's fair to say you would still not be out. I mean, I think you missed your exit here anyways. You missed your buy and your exit rate here anyways. Everything else here now is just hopium that you get development. Which is fine. If it happens, it happens. But I don't know. It's not looking so good. The first trade is right here. That's the trade. Actually, the first trade is this down to here. The second trade would be taking the double-ended play, which probably wouldn't have happened. So you're either one trade is here to here, or your one trade is from here to here, or you're still in the trade. So there's no two trade setup unless your only two trade setup here, Nuke, would be like this: short this. Okay, dude, can you like get out of the way? And you have a hedge right here, which would be really like big balls or like big energy play. Doesn't mean it would have been right. I think that's a lot of risk to take to sacrifice profits like that. I guess you could have had a double-ended trade where there's a take profit with also a stop set to like here. So you could have had two trades, but that would have been pretty good. Like that would have been really advanced. And those two trades are only worth 1.4. So your trade, I see this as one trade only. One, or like whatever. You're still in the trade, like one squiggly here. No, you're good, Blue Minnow. You're good. I'm just trying to learn the flow. So reverse levels are something we go over in one of the lessons, Blue. So you're 100% good, man. Don't be sorry. It's just you haven't gone over reverse levels yet. So like I don't think you'll get them yet. Which is okay. We're not targeting reverse levels anyways right now. In the future, we might target one of these as a reverse. In the future. It's not possible right now though, because there's not enough development. So Nuke, would you still be in the trade? Must be stopped out by now. Hey, look, your 805 got hit. Actually, no, it didn't. You want 808. Feels bad, man. Maybe you would have front ran it. Your stop is under 805. You'd still be in this. Would be relying on a 1 minute origin on the bottom to create. I see. That's the hopium trade. Okay, Bitcoin. Well, define justifiably here. Justifiably based on what metric? Like, what's justifiable to stay in this point when the 10 is right there? Why not just get the rebuy? Like, after this trade happens, there is no spot I would be rebuying yet. There is no justification for a rebuy. So define justifiably. Like, you're just trying to sit in this trade hoping it goes up long term when there's a better target right here. Yeah, like it can go up for sure, but why not just get the rebuy and sacrifice the 1% instead of taking all that risk? Like, would you rather risk a liquidation or a stop for -40 or sit and hope for 1% or 2% or 3%? You know how many times you're going to like take a -40 hit? Like, there's no justification to rebuy anything here. There's no 5-minute levels. You haven't hit polarity. There's no 15-minute levels. You're still laddering the move. It's having trouble holding. I might even go for 657 now. I think I might even go for 657. 46. I think I might get sneaky and go like this. 81. Oh, that feels wrong. Hold on. It's got to be 70. A little over 70. Yeah. Like 73. I don't see anything justifiable about this trade. You have a target here. So if this thing was to knife catch, the best case is a 1%. Best case scenario is 1%. You need to be in this thing where like you're getting 2% off this before a pullback. Like 1.85, 1.81, 1.8 to call this little thing right here. Maybe it's a localized origin, like 1.8. If it holds, it holds, but there's nothing there yet. Nothing that I would justify as a trade. So like I said, like, depends what you mean by justifiable. Like, just sitting in a trade doesn't justify the existence of it. Like, just because you got entry and it bounced doesn't mean that you should stay in it. Like, things, when they move, they just keep moving in that same direction. Oh, so you're still in the trade, looking for the development. It's right here. Okay. You just haven't hit your final target, in my opinion. I'm getting spicy. I'm going to go here. I'm going to deep dive the 5. Is there anything at that 5 that I can deep dive? That's like a really silly level. Let's see. Because you already back tested this. So you already like broke above it and back tested back down. $90. Oh, I knew it. 73 is perfect. Yeah, I'm going 73. If I miss it, I miss it. I'd rather reduce risk and get a rebuy anyways. So now I'm saying 17. Yep, 100% worth it. I'm not taking that. And then I would just be out with 20%. So right there, you would have been out. You entered here. Well, you wouldn't have been making 20% on it. You would have been 6 less. Unless you limit exited up, gaining the hold level, limit exiting up, but you would have been like 6% less, whatever the price is, because of the market stop. $58. $58 is the second best trade. The first best trade is this one. $90. $90 is first best trade. $58 is the second best trade. Third trade? I don't know. I don't know. Maybe long this? I don't know. I just think I wouldn't be in yet. So Nuke's officially out. Okay, you had 868. Is that? Yeah. I see. So you'd officially be out right there. You could have limited it out right now. Took in the second wave. See what I mean? It just, you get into these situations that's just not worth being in. Because now you're like, oh, I just took 14%. Huh. Good job, dude. Could have limited it for 23. Made 50% more. So if you made 200, this would have made 300. Now you could use your 1 minute as a hold level. If this gains something, and then you'd be re-entering maybe on the 1 minute if this gives you the reason to. Maybe. Have to see what happens. I don't even know if that's worth it. I think this is pretty valuable walking through a move like this, like what I would do, right? For everybody. I would hope, yeah, I think it will be. Hope it would be anyways. I think it would. I think it would be. I don't want to do CB today because we don't have enough people on a Sunday morning to do CB. And now it shoots up. But this shouldn't be a surprise to you. I talked this move through the whole way. This should be zero surprise to you as to why it's moving up and like to where your position doesn't make sense. Part of me just says make more money, just say 50% exit regardless. That's completely incorrect. That's what I did when I first started. Like I walked through this thing picture perfect all the way from like up here. Even when it tested here, even actually when we were here, I walked through every single part of this move with 0% misses, like impeccable accuracy, calling out every single part. So like there should be no spot in this where you're like, oh, I'm confused. There shouldn't be a confusion spot because when we were here, I said we're going for down here. Like there should be no confusion. It's just the only confusion you're having, Nuke, is just you're holding this trade way too long. You're holding this trade way too long. It's not even the point of the move that can stop it. It's as simple as that. This hasn't even reached what could stop this move, which is this and this and this. This is the area that could stop the move. If this bounces, it's just setting up a larger breakout in the future. You don't want this to hold if you're trying to long this. If you're longing this, you're just looking for more shorts up in here. Like, and if you're gonna short from here to here for 1%, why, when the risk to break the move, why not? What are you looking to accomplish by holding this trade? Like, what are you looking to make? 80% instead of 50 and taking all the extra risk for that 30% when you could have just shorted here again. There's your another 50%. There's no point in holding this trade. It doesn't make sense. Fundamentally, this doesn't make sense to hold this trade. There's no point in this where this trade made sense to hold it. Once you see this happen here, and I even like described it and said in the moment I would be out. Once this happens here, there's no reason to take any other longs here. And if you missed your exit here, you should have been exiting right here. And if you missed that exit, you should have been exiting here. Like otherwise, you're just hoping for some like sub polarity part of the move to hold long term, and then you're just still in the trade. There's no point in even triggering out anywhere. You might as well just let it ride your stop loss under here and just say like, oh, like I'm just gonna sit in this trade forever. There would be no purpose at all to set like trigger point stop losses on this trade down here, because you're just gonna do this. Like it's an origin. I said this from zero. When we were back here, I said this. I said it's just gonna test this origin over and over and over and over to try to see if it can hold. So why would you stop here? Why would you stop here? Why would you stop? Why would you stop anywhere here if you know an origin just has to keep testing? If you know it's going to do this and try to hold and this and try to hold and this and try to hold and this and try to hold, why would you ever stop out anywhere? You're basically saying I'm guaranteed to stop out 100% of the time with no benefit. So just get out here and then just take rebuys at every single test. Or if you think it's going down here, then just take that, because everything else doesn't make sense. You're using stop losses in a scenario where they just don't make sense. Remember what I said last week? Stop losses and triggers only work if the trade makes sense. This trade does not make sense as a holding it for a long. It doesn't make sense. So always remember that, Nuke. A stop loss and a trigger, a stop loss always makes sense. A trigger point only works when the trade makes sense. This trade makes no sense to hold it. Like literal zero. Look, you're just back testing the origin again. So this you triggering out on this trade. I'm looking for a word that's polite yet cutty, and I don't have one. It's a zombie trade. It's brain dead. We'll just say, I don't want to say brain dead. We'll say it's a zombie trade. Don't worry, everyone. Me and Nuke have that camaraderie between us. We're allowed to like say that. Chill out. No, Blue, Minnow. I have them marked on my screen, dude. I've talked about this for 2 hours. Why would 789 be the next trade? Dude, please stop. I spent 2 hours talking about targets. Why would there be a target? I haven't. No. It's okay to ask questions, Blue Nuke, Blue Minnow, but Blue Nuke. That's gonna be Nuke's new name is Blue Nuke. No, dude, like I have the targets on the screen. I've been talking about this for 2 hours. Like Blue Nuke. if Nuke's still holding this trade, he's now officially Blue Nuke. Don't worry, Blue Minnow. I bug everybody like that. It's just like a fun thing. It's not serious. I don't take life too seriously. I like to have fun with people, so I hope you have thick skin. Because mentorship requires thick skin. But I'm also very real, and I don't sugarcoat things for people. So, like, yeah. Please appreciate the cuttiness for like, no, don't make mistakes. We don't make mistakes in this in trading. There are no room for mistakes. Or if you make one, at least understand it and move on. See what I mean, Nuke? Like you wouldn't be triggering out. This either holds and it's trying to right now. This doesn't mean it is. See what I mean? It either holds or it breaks. A stop anywhere in the middle of this trade at an origin like this does not make sense. It's either going to continuously hold like whatever. It's going to continuously hold until it breaks up because it's simply breaking its like interior trends. But do you see what I mean about like why would a stop ever in any world make sense here? Because like you're getting frustrated about this trade because you're sitting there saying like, oh, like, you know, I don't understand how like it doesn't make sense to me. Like this, you know, like it either holds long enough to stabilize or it breaks down. But triggers on this don't make sense. Wrong level. Hit this 15, rebuy here maybe if it holds. Short this 15 so that you can short it to the rebuy. It's the same trade twice over. I'm not so concerned about local stuff here. To get above these origins, not sit here and hold them, and hard close under them would be like terrible here. 15 hourly 5. You really didn't even. But if I do not have cotton in my eyes, my brain just doesn't justify things. They shouldn't be used to justify things. I just got to take a step ahead of triggers. So what you need to do here, Nuke, is like, remember how I prefaced this whole entire lesson was off of like what this data is telling you. Remember, it's an origin level. So the way that it moves here is going to be prefaced by what it is, right? This needs to hold. This needs to hold these origin levels. Origin levels are designed to hold over and over. A breakout point is designed to bounce straight up. If you were at this breakout point and you did this and you started like testing it multiple times, I would say it's more likely breaking down. If this was to test multiple times, it's breaking back up. See, that's the difference. This can't go here and up. It can, but it's really tough when it's like redefining the polarity, right? Like it kind of just has to sit there and hold long enough to break trends. If it was this origin level, because this isn't like the pole, like this isn't defined in the range. The range was already defined here, right? This defined the range. So like when you get this one here, yeah, that doesn't have to, that can just bounce off of it. But like this origin here, like defining this level, can't really just bounce and move up. So your stops and all that, like this level, you wouldn't want to go like this and kind of hang around and back test it again and then back test it again. It's probably failing. It's probably just breaking this part of the move and going to have a big dump down to like an even lower range, like trend, right? So remember, it is shown to you by what move you're in. Origins need time to just sit there and hold. Okay, I'm back. It hit that perfectly. Oh my god, it hit it perfectly. $9.95. Oh, 990. Wind Rider. 979. 990. Yeah, you can't use 979 anymore, Blue. You came too close to that target. The target would have been here. Like 979, right? Like this is what you're targeting. It's not bad. The backside, it's not bad. The problem is you can't use it anymore because you've already tested that range, right? Like even testing right here is testing that range. So you've already tested the range. So now you would just be here, which is slightly above trend. I might even go this 3. Yeah. At that point, you just go to the 3. somewhere right below this. Did that just test the 3 though? No. 3 backside, yes. Yeah, this backside is the same as this is. Like, it's all the whole range is tested. Yeah, I think doing a walkthrough move like this is something I'd like to do often because I think this is very valuable for people. I think this helps people a lot. Because we can mark levels, but if we don't know how to manage trades, what's the point? You know, what's the point if you can't manage a trade? Marking a level doesn't do anything for you. If you can't manage it once you're in the trade, what's the difference? Managing a trade is where you make your money, not getting good entries. And I want people to realize that getting good entries is a prerequisite to managing a trade. And managing a trade is where you make your money, not good entries. And triggers only work if the trade makes sense. Those are some like really important. Those are some really important things to realize. Nuke says, I've come to realize a perfect entry is the easiest part. Yep. Managing is where all the complexities and stuff come in. Yeah. So today's lesson was something I called onsetting. Onsetting is a part of butterfly effect too. We did it today. Onsetting, not by intention, by the way, but that's just what this is. It's onsetting. It's onsetting the move based on what happens in the past. So I think the really valuable, important information today is about understanding, like, you know, this is moving down. And that was so easy to see that this has not done its move just based on the fact that there's more polarity inside of here. Like all of this move makes up of your polarity, right? Well, I'm sure you could even mark this right here now. Or can you? You can. Can you? Question mark? You can. It is a trend. So, this is called onsetting a move, right? Like onsetting a move is understanding what can cause the move to bounce up, you know? And now if this thing holds over time, this will no longer be a target. Like that's really important to realize where these targets exist to create accumulation, because now this will try to create accumulation for Bitcoin. If it can break out of its trend here, if it can break out of its trend, it'll try to create accumulation. But finding that point where Bitcoin needs to have this pullback, like if you were to just go to like a bigger time frame and just do something really bone dead simple, like where's the bull flag, right? Like here's your bull flag, and if you continuously hold this part of the move, break out of your bull flag. Like this is brain dead, but it still kind of proves a point that you're just trying to find that spot that creates accumulation. So if that's the spot, fine. But then the thing is it's like this. Here's one spot that could create accumulation. The next spot is down here, right? Or sorry, this guy here. This is the next spot that can create accumulation. So like whether you end up here or whether you end up in this upper one right here, you have to find a spot to create accumulation to break this part of the move. And for the same reason that I wouldn't be using this breakout, I don't think I'd be using this origin anymore either. I think that origin to origin is gone, and it's that moment has passed. Like not for sure, but like this is getting to be that upper part of the move. There's not too much left here. I might even go for the 1 hour, rejecting to the 4 instead, or this as whatever reverse this hit, like this candle right here, the 23.2. So there's a couple different options now that we got so close for the same reason, like how we manage this trade here. But this is called onsetting, understanding what is hit tells you how to play the move, which is it's critical. It's critical. Like there's no two ways about it. This origin, again, this has to hit multiple times. So like if you're triggering some midpoint, you're dumb. Well, you're not dumb. You just don't know. But you know what I mean? It's like, it's dumb. It's dumb to do that. You're not dumb. It's dumb. BFE 11 material, the bull flag. It's dumb to do that. It's just, yeah. This again, this is called onsetting. I'm dumb. But I think people understand why this trade makes sense like that now, talking about this all day. And then if you are reaching for these lower targets, why that makes sense, and what the reaction is going to be. Like, I can't stress it enough. That is critical. What this reaction is, right, will tell you, like, if this move is in succession. Just like this reaction will tell you if it's in succession. An origin has to hit and hold over and over, and if it breaks out of its little move, then it's in succession, and you get your rebuy, you know, somewhere else in the move. But this isn't even in succession yet. Like, I still think we're going down into this region here. I still think we have time. The longer this develops, the less likely this is. But you could also do something like create a 4-hour here, you know, go down here and then right above it, right, like that. You could also do something like that. So you do have to let the move develop and see, you know, what is going on in the move, because you don't even have like an hourly yet. You don't even have this hourly. I might even short this hourly. Onset, like ONSET, onsetting. Can you repeat that? Understanding what is hit, like what target is hit, will let you understand what needs to happen next. If it's an origin level that's hit, you have to realize that you can't trigger out between the origin touch and some point between. You have to trigger out like at a pretty, you know, if this origin is being hit here, which it is, like even the first attempt shows you can't trigger out in between. You can't hit this and then trigger out somewhere like here. You can't. It doesn't work. You're just gonna go back and test that origin. That's what origins do. They test over and over and over and over, and if they continue to hold, they break up in the other direction. This is not an origin level. This is a floating. This is like a floating hold level above the break of a move. So this is what broke the move out. This is the 5-minute, and this is the 1 minute inside of it. So this is the combo level. So this is the origin point. The only thing this should do is just touch it once and then just rip straight into the other direction. That's the only thing this thing should ever do. If this is hitting multiple times, it's not good. It's not worth taking the trade. That's origins. This is not an origin. This is what broke the move out. This thing should kiss it and rip off of it. And this yellow dotted line is just a 5-minute hold above that, because there's a little 5-minute hold level that was created like this, and then it went and back tested this and got above that 5-minute hold. Onsetting is all about understanding what the development of the move is. This is the origin. You broke above it. You held the move with a 5-minute, and you ripped up straight off of it. And then there's like a 1-minute combo level, like at 69, I think it was. That's why I have my buy set right there. And then this should rip it up, because this is just meant to hold the move up and represent long-term breakout. This represents like a big polarity point down. This represents polarity. This represents holding a move to break up and stabilize. This creates a range on one touch. This creates a range on multiple touches and then breaking trends. Guess if managed correctly here, my 805 would have been a pretty good trade. Yeah, I mean, and Nuke, that goes back to this. Like, take your 58%, and then if you think the origin is holding, like, take this rebuy in the future. Create a micro origin, take it right here, and then you would have been in this trade. But holding this trade through that long doesn't make sense. It doesn't make sense. Like when you first entered the trade here and it rips up so fast, good, stay in the trade. There's no reason to exit. Okay, now all of a sudden you bounced off this, you ripped up, you pulled back, you created a hold level. This should go completely untested. This should just go up above this backside at a minimum. At a minimum, this should go up. This still looks like a great trade to just continuously hold. At this point, you're already pulling back. It's like, yeah, just exit close to that top again. Just exit there. This trade is not going up, and that's exactly what I said when we were right here in the move. I said I would just exit here right now, my 58%, and then if not there, you just exit right here. I don't even know if you get that chance. And then you can, you see this develop, and you can, you can take a short there. Even you can take a short there to the origin again, because the origin has to hold. And then you could do like a reverse position here, like a hedge. You're short from here. If this holds, but stopping out anywhere in between this, do you see how that's like doesn't make sense now, Nuke? Like, do you see how, like, looking back at this trade, do you see now why it's like this? Makes no sense. Like, to trigger out anywhere in between here makes zero sense. Like, maybe down here somewhere when the move is already broken all of this junk. So you're either already exited looking for your second re-entry, because you could enter this as the origin. Like, you could say, oh, the move can hold off of this. You can enter here. You could enter the 5-minute touch again. And on that third touch, then you can hold it, right? Like, otherwise it's just hopium. Like, if you're here and you see this, then you can hold your position from here and be like, oh, okay, let's see if it can develop. And it does. It holds its move. For now. Doesn't mean it's moving up, but for now it's held its move. It's probably still moving down. But do you see why your trigger points now, Nuke? Like, nothing in here. Like, nothing here works or makes any sense at all. Yeah, I do feel like it makes a ton of sense. Hindsight is 20/20. Just need to realize when I'm in the trade at the moment. I said it before, just got to be better. Yep, and take like how I talked about it today. Walk through this move. Take that as like that wasn't hindsight as I was doing it, but looking at it now is hindsight. So in hindsight, you're seeing the error, but then you can do this in the moment. It's not easy. You got to realize how long I've been doing this versus, how I can see these things. But what I do know is that, like, taking that trigger here doesn't make sense. You're either taking it on like one of these rejection points, or you're just like holding it and setting your stop down here, because there's no valid point in here where all of a sudden, like, another thing to consider here, Nuke, is say you had your stop right here, and this is another really good reason. Say you had your stop right here. Sometimes you can go like this, hit this level, be here, and then in 5 seconds be here. And even if you had your stop here, you got liquidated anyways. That happens often at these origin first tests. So sometimes you also have another variable working against you, which it's not going to happen like 50% of the time, but I would say like 15 to 20% of the time. So 1 in 5 of these trades, or maybe 1 in 7, let's say 1 in 7, let's be even very liberal. 1 in 7 is an auto liquidation, because it's testing an origin for the first time, and it's like an auto liquidation because someone dumps like 500 Bitcoin on one exchange, and the market price is down here before it's even moved off of this, and then all of a sudden it's like, and you got liquidated. It happened to you last week. So if 1 in 7 times you get licked anyways, like, that also has to be considered into this, because a 1 in 7, like 1 out of every 7 of these trades, you automatically lose money anyways by having a trigger point here. So even if you had trigger points here, let's say roughly somewhere between 15 and 20% of the time, it doesn't work anyways. Yeah, I got smoked because of that. Yep. Like 15% of the time, which is enough to say, like, that was 2 positions that I just got negative on, and plus that position. So it's like having a -3 variable, right? So if out of 7 trades you triggered out in neutral profits, 3 out of those 7 are going to be complete losses, or it's going to be an automatic trigger out if you average it across. So 3 of them are automatic triggers out. So if you're lucky, 50% of the time you won't lose money. You 50% of the time, more than 50, because 3 out of 6 would be 50. So like 58% of the time, I don't know if it's 58, but we're gonna say that like 58% of the time, you lose money regardless, or you don't lose money. 42% of the time, you automatically lose money. Put it that way. Like that's a huge variable to work against. So even when this is in succession, you only have a 58% profit edge. That's it, which is insane, insanely low. That means 1 out of 2 positions almost will always be negative. That's how crazy that spot is. So 1 out of 2 with a slight variation weighted towards the 2, 1 out of 2, or like 1 out of 2.5 loses money regardless if the trade is in succession or not. So 100% of these trades that go in succession, 40% of them you lose money on. That's crazy. Automatically losing money because the position doesn't make sense is like what we need to avoid. Yeah, so this is a butterfly effect 2 lesson that hasn't come out yet. Again, unintentional, but it's called onsetting. It's understanding what sets up the move, like what onsets the next part of the move, and that comes from the past. I'm gonna give this thing a few more minutes. Okay, let's see if this breaks it down. If it does, then we can see if we hit the next target here or not. I can't believe I missed this. Origin here broke above it, fails down. I can't believe I missed that. 3-minute broke too, and that's where the 3-minute backside gets tested. That pulls back there, now here, and then down. Okay, so this might be another 15 or 20 minutes that this thing moves around for. Kind of got a breakdown now. You'd rather be at that 470 range? Yeah, 705 makes a lot of sense. The only thing I don't like now is how long this has been trying to develop. So origin for 70%. Yeah, that's the thinnest I would take though. Like I don't think I'd be up here at 47%, but 70 is okay. But yeah, I could see why like that 4-hour level is attractive now. Like down combo in here, somewhere down in here. I'm sure there's something down here. 384, something above that, right? Like something in here somewhere. 432, 470. Yeah. But the next part of that, Nuke, is that if it bounces this, it's going to go up even higher. If it bounces this, it's a small trade. So you get into that. This trade is just something like 2% trade. This trade is possibly 16. I think we measured it. Right? So you don't want it to go down to that level. You want to take this trade because of the implied odds. Even if you're only taking 4 or 5% of it, it's going to have an easier time reaching that 4 or 5% than being in a trade where the max cap is like 2 to 3%. So that's why you kind of want it to test that, right? Like you want it to test that. So it makes the risk valuable. Like it makes it a high value risk. instead of just like, oh, catching a knife at this. Like, I'd almost want to see this hit. I'd like go for the deepest, stupidest level, and if it misses, no big deal. I just get the rebuy and then take the 1 or 2% there, or 3% there. But this target here, this stuff here pushes it like possibly 16%. So yeah, a value of what the target represents is important. Implied odds, right? That's what broke up the range, and if it holds, it's still breaking up. If it doesn't hold, what broke up the range doesn't hold, then it's just going for an inverse target to fall further. Yeah, I like that play, Nuke. I like that strategy. 20,400 and the rebuy. I mean, you can still take the knife catch on it, but you might want to just take like a 1 minute rebuy after you find out what level it hits. Like, I like the knife catch at like the greediest, stupidest level, like the origin, the 1 minute, like whatever's just like so deep in there that it like can't go past. I like that as a knife catch. And if and I like marking all the levels in the 470 range, like everything from 500 to 300. I like marking all the levels and then just putting an order at the greediest one. And then if it bounces off one of the other ones, I can say, oh, it bounced off the 15. Let's try to develop X now. And that's where I rebuy. That's the strategy I like for that level. But I like this as a straight up knife catch because the risk you're taking is offset by the value. Like the value of the risk is huge. The value in this trade is massive. Go long 531 or whatever you want, man. I don't tell people where to buy and sell. I don't do callouts. I don't do anything like that. Implied odds is a really important thing. Implied odds is not to be overlooked with these trades. Onsetting and implied odds work hand in hand together to understand architecture better. Today's lesson in onsetting is a massive missed piece and a huge complementary to implied odds. And I think a lesson like today's lesson, I think this is the most valuable type of stuff we can do, like trade management. Yeah, exactly, Nuke. That's perfect, man. I love that strategy for that level and that play. Because, like, who cares? Who cares if you missed the perfect knife catch as long as you can take, like, you know? It would be like saying the same thing up here. Like, who cares if, like, you missed this? Just take the hourly, dude. Look where you'd be now. 5%. Like, who cares if you miss this? You're not holding this for 7% anyways. You're taking like what, 3-4% off this trade, maybe 4. You're taking it to the bottom of this. That's it. Maybe a bit deeper. Maybe you can justify a little deeper. So if you were to catch this, what do you take here? 4%? Yeah, you take exactly like you don't even go for 5 here. You just go for this. Like, you just go for the hold level. You're taking 4% here anyways. Can't you just take like close to 4% here anyways? Much safer. Like 2%. That's fine. And you can constantly take like whatever. I think this was an origin right here, 5 minute origin. So this is like a good like right down to this target. Even if you were just go to the wick here, this is 2.5%. And then you take the reverse level down to that same, like a little deeper in the move. That's another 2.5%, maybe even back to this. That's that origin there. You take that to 3%. So like, who cares? Because you would only take this to 4 point something anyway. So this idea of catching knives is a fallacy anyways, because it's not like you catch a knife and you're all of a sudden like, okay, if this gets hit, I'm not taking anything above, say, like this. 5% is my max on this. I don't care how high it goes. I can go to 16% all at once. I won't be in the trade. C'est la vie. I don't effing care if it goes that high. It could it, yes, but it just means it's easier for the implied odds to have that trade go to fruition. Watch the replay, Choose Goose. I talked about this like already, like multiple times. The replay will be up today. I've been talking about these targets for like close to 3 hours now, so not really something I want to go over like a 4th and 5th time. Yeah, it broke the move out. Oh, because you're not there yet in the material. Oh yeah. So quick TLDR. What breaks the move up is also what can hold it up. Like whatever breaks the move is also polarity. Like whatever origin breaks a level is polarity. Like this could possibly be polarity in the future. Like whatever breaks the move up can also hold it up, and whatever breaks the move down can also hold it down. That's the range stuff I was talking about earlier, choose, because that's the range that broke the move up. I think for me, it's a lot of brain dead ego. Where I think you try to be perfect, but starting to realize just taking the greediest knife catch, and if everything else fails, rebuy is a lot more practical. It's more practical and it's easier to trade. Just 5-minute hold levels are pretty easy to make 50% on, like, constantly. I've taken that 500 account and built it to like 4,000 doing that. Like the stream challenge or whatever. I was hoping to have 10,000 by the end of the week, but I simply just haven't had time to trade. Yeah, choose that level is the final part of that interior piece that broke the range up. When that happened, it broke the whole move up. So that was kind of the final moment. That's why. It makes sense now what you're asking, because I don't think you made it there. This was the final part of that range. Like, this is what, after you laddered the move and created like the floating levels down here that were untested, this was the final piece of the move that held it. So like if you're gonna hold up this part of the move to go higher, it's gonna be off like the local breakout point, not whatever 4 hour here or 4 hour down here or down here or whatever. This was the breakout moment, because this broke this move too. This broke this ladder point, giving you your float rate here, which will end up just being the 4 hour over time if you don't hold this. That's why I like this, because it broke up the move. Just interior to the move, you know what I mean? Yeah, it makes sense. Okay, good. Yeah, I forgot you hadn't made it there. There's like some new members, so it's like who's where is always surpasses me in the moment. Okay, Bitcoin, come on, man. Things are starting to get pretty spicy here. Is it gonna go hold this again? It can. I don't think it's necessarily a great rebuy though. I would still wait. The only thing I haven't checked before we hit that target, the only thing I need to check is what levels are created on the inverse to see if this still makes sense. But from what I'm seeing right now, it still makes sense.